Many people use the words investing and trading as if they mean the same thing. They hear someone made money in the stock market and assume it's just like betting. But it's not. Each approach has a different goal, a different time frame, and a different way of making decisions. By the end of this video, you'll understand the differences between investing, day trading, swing trading, and gambling, and why knowing the differences is one of the most important lessons every beginner needs to learn. Let's start with investing. Investors usually think in terms of years. They buy shares because they believe a company will become more valuable over time. They spend more time studying the business itself. Instead of focusing on the daily price swings, their focus is in investing for the future. They look at things like the company's financial health, competitive position, and long-term growth potential. Day trading is very different. A day trader buys and sells during the same trading day and seldom holds a position overnight. Since the holding period is much shorter, the chart becomes much more important. Day traders watch how price behaves throughout the day to understand what buyers and sellers are doing right now, instead of speculating where the stock will be months or years from now. Swing trading falls somewhere between investing and day trading. Swing traders usually buy a stock and hold it for several days or even a few weeks, instead of trying to profit from the smaller price changes that happen during a single day. They focus more on 4-hour and daily charts, which make it easier to see the larger price trends that develop over longer periods of time. Although swing traders hold their positions longer than day traders, the basic process is the same. They still study price charts, look for important price levels, evaluate volume and momentum, and make decisions based on what the chart is showing. The chart itself doesn't change. The only things that change are how long they plan to hold the trade and which chart timeframes they focus on. Now let's talk about gambling, because this is where many beginners become confused. Gambling isn't defined by how quickly money is won or lost. It's defined by making decisions without a structured process. Buying a stock simply because it's moving higher, or because people on social media are excited about it, or because you hope it will keep going up, is not a trading plan. Trading means making decisions based on evidence. Gambling means making decisions based on hope. And hope is not a strategy. If you trade without a structured process, you're not really trading, you're gambling. You can make decisions based on observable evidence rather than emotion by asking yourself these questions. Is price near an important support or resistance level? Is there strong participation behind the move, or is volume relatively low? Is momentum increasing, slowing down, or beginning to change? Is price trading above, below, or near VWAP? This way of thinking is built around the core 4 principles. Structure is made up of important price levels where the market has reacted before, such as support, resistance, previous highs, and previous lows. Participation is measured by volume, which tells us how much trading activity is supporting a move. Momentum tells us whether buying or selling pressure is increasing or fading. Location is where VWAP becomes useful, because it shows whether price is trading above, below, or near the session's average price. When you evaluate structure, participation, momentum, and location, you begin seeing how everything fits together. Sometimes that means waiting for the chart to provide more evidence. Trading is the disciplined process of observing market behavior, developing a structured trade idea, managing your capital exposure, and making thoughtful decisions based on the evidence available at the time. When you learn to approach every chart with that mindset, you'll become a calmer and more disciplined trader. That's the foundation we'll continue building throughout this channel, because a consistent process will always serve you better than chasing after rainbows.